The Trader Cobb Crypto Show, talking business in blockchain.
G'day guys, thanks for tuning in to another episode of the Traders Chat. I'm here joined with Lou, our senior trader and our community manager. How you doing, mate?
Good, mate. How are you?
Oh, pretty good. It's nice to see some green in the market.
Yeah, nice. A nice start to the year with some solid volatility. Pretty similar to last year when we traded Bitcoin when it broke that support level of 40,000. And we traded into the 30s. And that was a period of really high volatility around about this time of year. And then, now we're trading long in another period of high volatility.
So it's nice to trade long for a change.
It's something different. It's good. Yeah, something different.
So in today's episode, we'll just run through some CPI data. We'll have a look at the Bitcoin chart and the total crypto market cap, and we'll cover some NFTs as well. But before we get started, we've just got a quick word from Craig about our newest sponsor, BitGet. So take it away, Craig.
Just a quick word from our sponsors, BitGet. TRADERCOBB and BitGet have partnered up as we've done extensive research on what we believe to be the best trading platform for margin traders on the market today. We've got a full tutorial on how to raise orders and how to get access to your trading account, as well as a 10% trading fee discount if you click and sign up with the link below. With great liquidity and great order systems, this is the premier platform for us going forward. Join up with the link in the description to get 10% off your trading fees.
Let's kick things off with CPI that was released last week. The Fed announced that inflation had, slowed down just a little bit from about 7.1% this time last year to 6.5%, which gives us the 6 months in a row that we've had CPI sort of slowing down a little bit. But, for the past 6 months, we've had interest rates continue to increase. It started off around 75 basis points per month. I think last month was 50 basis points. So I would expect to see that the interest rates may ease off a little bit. Maybe we'll stay at 50 basis points, potentially drop that down to 25. What do you think, Lou?
I think they're going to keep on raising rates. I think, personally, I think that, so the last time we were in this kind of regime was with Paul Volcker, the last Fed chair in the 70s or 80s, one of those periods.
Before our time.
So before our time, certainly. And he was in a similar situation to what what Jerome Powell with the Federal Reserve is in now. All central banks are in. So really high inflation. And he said that to break the back of inflation, they had to raise rates a huge amount. So don't quote, I forgot which decade that was. It was either 70s or 80s, I'm pretty sure. And so to break the back of inflation, as inflation was coming down, he even started hiking rates more. And everyone was like, what are you doing? He's like, got to break the back of inflation, then we can lower rates and we'll actually see it cooling off. So look, I'm not a macro guy. I just trade off the charts. But look, I wouldn't be surprised to see interest rates rise a bit more. But it looks like the Fed's doing their job with dropping inflation down, which is good.
Yeah, that's a good point. So their goal is 2%, so 2% inflation. We're sitting at 6.5% year on year. So to get that down to 2%, I think
hike rates a fair bit.
Yeah. Are they going to hold interest rates stable and hope it keeps coming down slowly without blowing out the unemployment rate? Or are they just going to go hell for leather and just, bump those interest rates right up and get it over and done with?
Yeah, who knows? I mean, they kind of went hell for leather last year, didn't they?
Well, yeah, exactly. Yeah, 75 basis points every month.
And the world
4 months in a row.
Yeah, and look, I remember at the beginning of last year, the beginning of last year, where a lot of people were like, because we've been in such a bull market in equities for such a long time, they're like, the Fed is not going to raise rates no matter what, because they can't crash the market. And to me, what the Fed's shown in this situation is that they don't care about the market. They care about dropping inflation, so they'll do whatever it takes to do that. And so, we'll see what happens.
They care about dropping inflation and looking after their billionaire buddies. But just to put that into perspective, we started off around June or July at 1% interest rate. It was around 1% around June, July last year. We ended the year it was 4.5%. Right, so that's a huge increase over a 6-month period. And to put that into perspective, if you had $1 million house loan, the interest on that, you were paying around $10,000 for the year on $1 million house loan. That's 1%. And now you're paying at least $45,000 on that same house loan 6 months later, for a 12-month period.
That's crazy.
Isn't that crazy? But that's the interest rates for the Fed, right? But banks sort of, do their own thing. So 4.5% interest rate for the Fed doesn't mean that that's what the banks are charging. The banks I think mine is around 6.35% at the moment, which started off at 3.75. So that's a huge increase, like if you were
double.
Yeah, exactly.
It's almost double, yeah.
Yeah, and here in Sydney, you're very, very lucky to get a house for under $1 million. And 2 years ago, it was probably 2 years ago, there were so many young people just getting loans because the interest rates were so low, just getting loans, buying these houses, living in them. And now I think we're really starting to see that pain kick in where they can't afford the repayments.
Yeah, and it's compounded with inflation as well, so cost of living. So cost of living is higher, is a lot higher. So yeah, all these things mixed together, and they're real, and they're not just felt in America or in the United States or in Australia. They're felt all around the world, in Asia, in Europe, even the lesser developed economies in South America and Africa. Like these effects are felt all around the world. Inflation, so higher cost of living, and high interest rates as well.
Yeah, it's getting out of control. But let's just see what happens. There's nothing we can do. They're just going to make their decisions, and all we can do is not even really take it into account when it comes to our trading. What we do is trade our charts.
No way. Yeah, no way. You can't take any. Well, for us as trend traders that only follow the charts, you can't take any of that stuff into account because it's completely unpredictable.
No, that's right.
I don't know anyone that's playing golf with Jerome Powell this weekend. I don't know if you do.
Unfortunately not. Maybe that's where Craig is.
Maybe that's where Craig is, yeah.
But let's just have a look at the charts, right? I'll bring up the S&P so we can have a look. All right, so the S&P. Now this is on a weekly time frame. So we can see since sort of the beginning of the year, right? That's when the S&P was at its peak. And we've just seen a really nice price action coming down, creating lower lows and lower highs on this weekly time frame. And now we're sort of in this funny range, aren't we, where we've created a lower high, but almost created a higher low. So what does that mean for you, Lou, and how would you trade this, or would you just step away from the S&P altogether?
If I traded this exact weekly time frame, could you just zoom in on your chart a bit there?
Yeah.
Yeah, that's good.
Let's delete this level.
If I was to trade this exact weekly time frame, I would be drawing in a level probably at around just above 3933. So just across the top of those candles. Yeah, around there. Yeah, around there.
Around 50.
Yeah, call it that. So I draw a level in there. because that seems like the next level of interest, let's say, the next level of where price could act as resistance. And then I'd be looking for a lower level. Maybe if you drop your cursor down a little bit further up, yeah, like somewhere in that region. In there, and then I'd kind of be like trying to identify some type of weekly range, and then being like, look, if price decides to jump out of this weekly range to the upside, then I might tick down to a few lower time frames like the daily and look at trying to capture that move coming out of the weekly range to the upside. If this was to turn into a lower high instead of a higher low, I'd be looking at price retesting that range to the downside and looking at how it could show. That's how I see that chart.
Yeah, for sure. If anyone that just listening and not watching the video, it's definitely worth jumping on TradingView and checking out the S&P 500 chart on the weekly time frame. Beautiful trend, to the downside for the past 6 months, almost 12 months. Sorry. And yeah, now we're just coming to that funny sort of price action where it's not really trending, it's in between trends. So if you are looking to trade the S&P, I'd probably check out that weekly chart. But let's have a look at the Bitcoin dominance.
I haven't looked at this chart in a long time.
You haven't? No, look at this. Look at that support level at around 40%. So 40% Bitcoin holds the dominance of the total crypto market cap. 40%, it's just such a nice support level. It's just bounced and rejected off that. And finally, we've found a nice rejection at around September last year and just headed higher. Where more money is flowing into Bitcoin and less, I shouldn't say less into alts, but the majority of funds are pouring into Bitcoin, which is really interesting. And that's reflected in I'll bring up the Bitcoin chart. So on the weekly time frame, it seems like a really good week. Last week, even the week before, we had a nice green week. I think Bitcoin closed up almost 22%. But on the grand scheme of things, if you zoom out and look at the weekly chart, that's not a huge candle. It's big, but it's not huge. We've seen much larger candles in the crypto.
Kind of interesting with that weekly chart there. That's the first, like this doesn't mean anything, but that's the first, green candle we've seen in that weekly chart pushing out of the cradle zone for a whole year.
Well, yeah, that's a really good point. What's this last one here? March last year. So yeah, almost 12 months. The first weekly bullish candle that has broke out of those moving averages.
Yeah.
Still,
sorry. We're talking about the weekly. Yeah, not the dominance chart.
No, this is the weekly Bitcoin chart. Yeah. So we're still not out of this downtrend. Still haven't really broken this previous high or created a new low. Sort of just crab walking sideways. So
I'd certainly be watching. Yeah, sorry, what was that, Rhys?
Oh, you like to talk about the potential of a bear market rally? Do you think this is it?
Yeah. So what we've been talking about in the community is, and I actually did a webinar on it around this time last year. I think it was February or March. About one of the characteristics of a bear market are the really vicious bear market rallies, and so the bear market rallies I read last year in crypto or in Bitcoin are sometimes larger, are most of the time larger on an intraday basis than they are during a bull market. So they can be savage and they draw everyone in and then take them down. Like if you look at that rally, that last rally we had on the weekly up around March last year, I'm not sure what percentage is that? Like from say the beginning of that rally to the end.
Let's have a look. Let's say from the bottom of these weeks. That's a 45% rally.
Yeah. And what about just from the bottom of the two green candles? Yeah, like around there.
30%.
30% rally. That's huge. So that's 30% in 2 weeks.
Yeah.
I think. So 30% in 2 weeks. So that's a massive rally to get people. And look, sucks everyone in at 40,000, and then look what happened. Boom, baby. Just.
Well, does that line up
absolutely.
with that monthly candle? Yeah, it does. So that's when I remember that monthly candle pulled back into that cradle zone. We had a nice big green bullish candle in the monthly, and Twitter was going crazy about people buying back into the market.
Yeah, it was, and we rejected that upper level. And I remember us being in the community then, and we had that upper level on the weekly identified at about 45,000, let's say, give or take. And we just saw that what some people call like a double top formation under that level. Tap, tap, create a low high. And then I remember, because we had options to either raise long or raise short, and raise short and cleaned up.
What I thought was interesting was the so the percentage that we saw gain last week was around 22%. And if we look at the weekly candle of the FTX collapse, that was 21.93%. Isn't that ridiculous that Bitcoin price has regained the range that we fell from one of the largest crypto exchanges collapsing and one of the biggest fraudulent activities in the last decade?
Oh, like the last century. Like
a century.
FTX was the second biggest exchange.
Like, it's just
by volume, FTX was the second biggest exchange. And we've just made back that whole move to the downside.
Well, we flushed
in 4 days.
Flushed out a lot of people, unfortunately. You and I both know people that have walked away from crypto forever because they
100%
got wiped out.
It flushed out us as well.
Flushed out us, yeah. But, the difference between us and the people that walked away is that we're back and we're seeing value in Bitcoin. And we're in it for the long term. Yeah.
And unfortunately, look, we still had funds. We still had enough funds left to trade with at the end of the day as well to walk away with.
Exactly.
We did lose a lot.
One thing I worry about is the people that did walk away and they see some nice price action coming back into Bitcoin, and we start hitting the $40,000 marks, and then they FOMO in, and maybe we just got sucked into a bear market rally. We just don't know.
You don't. Yeah, that's right. You don't know what's a bear market rally and what's not. Just
trading around a bear market rally.
But I tell you what, that's a very nice level there on the weekly. Just quickly, Rhys, if you just raise your cursor, somewhere around there, where the top of the current candle is, somewhere around there. That is a very precise level through there. I would be watching that with with eagle eyes.
And again, for those that aren't watching, it's around the $21,500 mark. If we flick down to the daily, let's have a look at the daily chart. This is really interesting. Look at that for a rally, just consecutive green days. And then, the one red day that we did have was still a bullish candle. Yeah.
If we take that level at 21,804, if we take that level, we're going to see some more upside, I reckon.
Yeah.
If we break through it like we did with those lower levels,
that's a
strong case.
Definitely the price range that we're watching. Not really looking to take any long trades on Bitcoin at the moment. Not with that sort of price range up ahead. We're just waiting to see how price interacts with that level and whether we see a well-deserved pullback back into those cradle zones before another shot higher.
Yeah,
maybe that doesn't come. Who knows?
Yeah, exactly. Or we get a rejection. That's right. Or we get a rejection of that level and we go short.
Yeah, that's right. We're not here to try and predict the future, to predict what Bitcoin's going to do and base our trading around that, whether it's going to go up and, reject off this level and come down 30% and, bounce off the I don't know, the 50-day moving average, something like that. That's not how we trade. We just trade what's in front of us.
Yeah, we just trade the trend, right?
Yeah, exactly. Another one that's had a nice rally was ETH on the. Let's have a look at the weekly chart. Another one that still it's had a nice rally, but we're not out of the woods just yet. The weekly chart is just sideways. No real higher highs or higher lows or lower highs or lower lows. We're just crab walking sideways, but we do have a major level up ahead around the $16,000 mark. That's the previous high, and that's what we'll be keeping an eye on for Ethereum. Do you have any points to add on how we're approaching the charts this week, Lou?
Just rinse and repeat, mate. Like, looking at those major levels, if price breaks out through those major levels, we try and trade through those levels or off of them. And then looking for cradles when there's actual momentum in the market. So last Thursday, Friday, Saturday, that was a really good environment for taking cradles in and fib boosters on lower time frames if you're that way inclined. And so that's what I'm looking for. Just the right environment and flexing, using the right strategies for the right environment.
Last week was definitely the week for cradles, even breakouts. Breakouts were setting up and breaking through. But yeah, I think fib boosters were a good strategy to use as well. And for anyone that's listening, if you're not in the community, you should definitely check it out. We do have a free community located on Discord. Just head to our website to find out more. I believe it's in the link, or use the link in the description below this video as well. So that's it for charts. Before we wrap things up, I just wanted to talk about a few NFT projects.
Oh, sorry, just quickly, Rhys, should we have a look at the Dixie?
Yeah, let's have a look at the Dixie. Actually, yeah, this is one that you did want to talk about, the Dixie, the US dollar index.
So let's bring it up on that monthly level.
The monthly level. Look at that.
Look, the reason we've been talking about this a lot in the community is because kind of looking at it on live trading floor, and it's really interesting, right? So we've been following this chart for ages, and we saw price pulling into this really established monthly level, and then lo and behold, the S&P 500 breaks its upper range, starts trading higher, and the Dixie breaks its major. So the Dixie, which is the strength of the US dollar, breaks its monthly support at the same time as we're breaking out in crypto and in S&P 500. Now, I don't look for correlations, not at all, but this is a wonderful chart to trade. This would have been, if I was trading traditionals, this would have been a great chart to trade. Trading that break of that monthly level to the downside. Because look at this. This is like a textbook. This chart, it's like a textbook. It's like a huge rally up, monthly support broken. This is also this is quite bullish, I think, for our markets. Like, you have a weaker US dollar and a bit of risk being put on in equities as well. And so, a weaker dollar is always better for those futures contracts in crypto that trade against the dollar, of course. Yeah,
definitely. I think it's definitely worth keeping an eye on the US dollar index. You cover it every morning in the live trading floors. But yeah, it's interesting now to see how the US dollar is interacting with the crypto markets. So we never used to really pay attention to it, but now the S&P and the Dixie are really, the crypto market is in flow with those other two markets, which I believe just shows how much institutional money is in the crypto space at the moment.
Yeah, 100%. And I'll put a crazy thought out there into everyone's head. Okay, let's say the Federal Reserve doesn't raise interest rates anymore. Let's say the next Fed interest rate announcement is lower, like you said. Wouldn't these two charts, so a rallying S&P and a weaker US dollar and a stronger Bitcoin, almost preempt that move?
Definitely.
Yeah. So let's see what happens.
Heard it here first. No more interest rates.
No more interest rates, baby.
No more interest rate increases. Let's just see how that plays out. I think it's going to be a very interesting year. We don't like to predict the future, but I in this case, I think we'll see interest rates continue to increase for the remainder of this year before easing to, in maybe Q4 of this year, and some more money flow back into traditional markets. And that leading right into the Bitcoin halvening that everyone likes to talk about, which is happening in 2024. And we do see some crazy price action leading into a Bitcoin halvening. So I think this year is going to be an interesting year, but next year, an even bigger one, which is really exciting. Gives us time to sort of DCA back into the market after the FTX collapse.
For sure, 100%. It's gonna be awesome year, and to start the year like we have now is just great.
What better way to start the year with some long trades to get you back into it after a little break,
and some good price action. Yeah, lock in some profits. That's right. It's a really positive way to start the year.
All right, so that's it for the charts. If you're listening on the podcast, then feel free to jump on YouTube and watch this so you can see what we're talking about on the charts. But the next project that I wanted to talk about was an NFT project, Game of Thrones, one I was really, really excited about. I thought it was going to be amazing. Big Game of Thrones fan. Have you watched it, Lou?
No, I watched the original ones a little bit, but not really.
We can't be friends. But yeah, a drop that I was really excited about, and it was a complete failure. I believe it launched on the marketplace on Nifty. I'll just bring up why
was it a failure?
Well, you've seen some NFT projects. You know what NFTs look like. You know good ones. You know what bad ones look like.
Yeah, sure do. Yeah.
Huxley Saga. Look at this. This is if I zoom in here, look at the hands on this bloke. It's like there's just no.
For 2023.
Yeah, like
technology graphics for you.
A few words in an AI generator would produce a better NFT than that. I don't know.
100%.
Yeah, it's just crazy. If you're listening in, it's definitely worth just Googling the Game of Thrones NFT drop. It did sell out, which is a surprise. But I believe when it sold out, you're buying it pack, and they revealed later on. So it would have been a rude surprise getting something like this in your pack.
So if they sold out, does that mean everyone's trying to sell them now because they're pretty average, or?
It depends on what's behind the project and what the roadmap looks like.
Yeah.
I haven't looked into it too much. I was pretty disappointed by this one, so I haven't looked into it too much. But I imagine there's a lot of people in the same boat as me that it just turned off. The next one was Moonbirds, one that I really like. They've just signed a talent agency in Hollywood called UTA, or United Talent Agency. So what they're doing is they've built the Moonbirds brand around Web3. They've just signed a talent agency in Hollywood to sort of get that brand outside of Web3 and to everyone. So it's a really big step for the Web3 space and the Proof Collective and Moonbirds as well. I believe Yuga Labs have done the same thing. Yuga Labs are behind the Bored Ape Yacht Club. So just a bit of an update on some NFT projects.
Remember this time last year, going back to NFT time, there was a land sale for Bored Ape Yacht Clubs, wasn't there, around this time of year?
Yeah, I think it was a little bit earlier.
Or was it a bit earlier?
Sorry, a bit later.
A bit later, sorry. And the hysteria behind that?
Yeah. So much hysteria around the
crazy people losing hundreds of thousands of dollars.
Yeah, the NFT space.
I'm a proponent of the NFT space, by the way. I think it's awesome. There are some really cool projects out there.
Yeah, really cool projects. One that we really like is the Huxley Saga.
Huxley's awesome.
We're not sort of trying to promote it, but it is just a cool project. Definitely worth checking out.
Yeah, for sure.
I'm really excited about the NFT space. It sort of boomed. I shouldn't say boomed. flourished during the downfall of FTX. Some projects are still doing really great things, raising capital as well. So if we do have a nice bull run in the markets, I can see the NFT space really picking up as well.
For sure. Yeah. Yeah, and people are just attracted to NFTs. I don't know, there's some kind of attraction to it. Everyone loves them.
Can you see them being the future of art? Instead of people having expensive paintings on the wall, maybe have a digital frame.
Oh, 100%. I've been looking at Twitter. I was looking at Twitter the other day, and it was showing the history of art and how it said this house was built in 1780 by like illiterate peasants. And it's just like a really beautifully built sandstone cottage. And then it goes, this building was built in like the 1940s or like 1930s. It's like a architectural wonder, and it shows like the Empire State Building, the Eiffel Tower, things like this. Then it goes, these are the skyscrapers built now, and they're just like they don't resemble anything to what art used to be. Nothing. Like they're just like these huge boxes or bunkers. And art's the same, you know. You look at Michelangelo and the famous paintings of gods and humans and portraits and everything. And now you look at art today, you know, you can buy. So you can buy anything.
Rubbish.
Yeah, and I'm not saying NFTs are rubbish, but and they're not. I don't believe they're not. They are at least. But the digital art is a natural transformation forward. Yeah, it makes a lot of sense to me.
That's why I'm in the space. I believe it is the next step for art and collectors. It's the digital, the collector side. And that way no one can, I mean, you can just take a screenshot of an NFT, but you're not the real owner, like the real owner is on the blockchain. Your wallet is on the blockchain. Everyone, you can see who owns that original piece.
Yeah. Well, what do you think is so special about Huxley? Why do you like Huxley so much?
It has a use case. And that's what I think a lot of projects don't have. They're just these silly pictures or...
And what's its use case in 2 sentences or less?
Well, one, the founder behind Huxley has a good history. He's a great artist that's behind some Marvel movies. And 2, he's creating a movie.
Yeah, sure, true, yeah. And a video game. And he was behind creating... he was one of the lead devs on Halo, Call of Duty.
Yeah.
All those cult era games, I guess you call them. So yeah. And he's developing a video game for his particular thing.
Well, that was the reason that I bought some Huxley comics and avatars. Is if this does take off, like if this is a seriously a good movie, then I own one of 1,000 robots that he's created. There's only going to be 1,000.
Yeah.
Like how cool is that? Imagine if this was the next, say, Star Wars. It may not be. It could be. But
you also own the comics as well.
Yeah, imagine if there was 1,000 avatars that were released before Star Wars, and then you were the one that owned Obi-Wan.
The originals.
Yeah.
Yeah.
Like how cool would that be?
Yeah, it'd be awesome. Yeah, for sure.
I just think it would be cool. Bit of a flex.
Also with Huxley, remember he went into the first comic they released went into one of the highest selling comics of all time, like top 20 highest selling.
Yeah, the issue 1. Yeah, definitely.
So a few things. Use case. I think use case is the big thing there with the NFTs. If it doesn't have use case, I wouldn't touch it.
I wouldn't say that I'm an expert in the NFT space. I have poked around a little bit. I know a few projects. I don't think you're an expert either. Correct me if I'm wrong.
No way.
I just think that the space has... Most projects have a good use case. And now with the crypto space sort of tightening up a little bit, it's probably harder for people just to create an NFT project with no use case and expect people to buy it. There was a time and a place for that, and that was early last year, maybe the end of the year before. I don't think that's happening anymore.
No. Kind of like the ICO phase. People get scammed heaps and then you can't do anything.
Yeah, that's right. All right, so that's it for today. Let's wrap it up. Thanks for joining, Lou, and speaking your expertise over the charts and how we're attacking the markets this week.
Thanks for having me.
Craig,
Always good to chat.
Yeah, it's always a good chat. Craig will be back soon. We'll have him on here as well. And yeah, thanks for listening. I hope you'll have a great day, and we'll chat to you guys next week.
The Trader Cobb Crypto Show, talking business in blockchain.